As long as she's facing Macron or Fillon, the markets are very happy that she's very unlikely to win. Adrian Schmidt, FX Economics. Theresa May called a snap election in the UK. How have the markets reacted to this news?
Well, the pound has gone up. The markets seem to think that the election will be good for her. She'll get an increased majority, and that will help her negotiate a better Brexit deal. Whether this is true, of course, is debatable. She will probably get an increased majority because the opposition Labour Party is in disarray and likely to seem like to lose a lot of seats in northern constituencies, especially those which voted in favour of Brexit. Whether this will help her get a better Eurozone European deal, though, is very debatable because although the timing of the next election would be moved to 2022 and therefore be a bit more convenient from the Brexit timetable point of view, it's not clear that her attitude to what's a good deal for the UK would change for the better necessarily. Some people think it would. Some people think she will be able to avoid her right wing of her party dictating the terms. But it may also be that if she wins an election with a broadly pro-Brexit nationalistic stance, that she'll feel that that's the best way to approach her politics going forward, and therefore presenting a victory in the Brexit negotiations would involve a more nationalistic stance as well. So that could mean that she actually turns more hardline. I think it's hard to say, and I think in practice the market's reaction is of sterling going up is probably as much to do with the short positioning that existed into the announcement as it had with the tail of the announcement itself. So all in all, sterling's been stronger, but we may have seen the best of those gains. And I think going forward into the election campaign and into the Brexit negotiations, things are looking decidedly more uncertain as far as both politics and economics are concerned.
Continuing on the election theme, the French elections are fast approaching. How are the markets preparing for the fallout, if any at all?
Well, the markets seem reasonably sanguine about the French election prospects, even though the polls are very close going into the first round. The reason I think they're sanguine is that even if we did see Le Pen get to the runoff vote, as long as she's facing Macron or Fillon, the markets are fairly happy that she's very unlikely to win in the second round, and therefore we're going to get a broadly pro-establishment president. Even if she did win, I think markets are aware that she wouldn't be able to get very much through Parliament because she hasn't got very much representation there at all. But even so, a Le Pen win in the second round would certainly be negative for the euro and European stocks. The big risk is if we get a Le Pen-Mélenchon runoff. In other words, Le Pen and Mélenchon come first and second in the first round vote, because both of them are anti-EU and both of them are seen as anti-establishment, and that would be quite a negative outcome for Europe and for the euro and European stocks. I think it's quite a long shot. At the moment, Macron's the favourite to get through with Le Pen, and if anything, Fillon is the next most likely. But polls are close and aren't therefore that reliable at this stage. There's only a few percent between first and fourth. So I think anything other than a Le Pen Mélenchon runoff would be seen as reasonable for the euro and European stocks. If we did get Le Pen Mélenchon, we could get a very sharp negative response. So as it stands, the euro has recovered a little bit from the lows it saw a week or two ago, mainly because the dollar's a bit weaker, but also the improvement of Macron and a slight decline in Le Pen in the polls has helped, and some of the good European data has helped as well, with this morning's French and German PMI numbers, both looking quite strong. So all in all, the euro it's in the middle of its range pretty much for the year. I think the risks are most likely that we'll see some gains on the first round, because most likely we won't see a Le Pen-Mélenchon runoff. But if we see Le Pen-Mélenchon, then we'll see some sharp losses. So it's like a 80% chance of a moderately positive outcome and a 20% chance of a extreme negative outcome.
Tensions surrounding North Korea have resulted in a decline in the dollar. Do you expect this trend to continue?
Well, some of it's down to North Korea, some of it's down to slightly disappointing US data. Some of it's down to disappointment at the failure of Trump to get anything through on healthcare reform or propose anything that seems likely to get through on tax reform at this stage. So it's a general disappointment with the Trump administration. The North Korean aspect is part of it, but I don't think necessarily the major part. In the end, the dollar has suffered against the yen because of that, but it's suffered also against most other currencies, except perhaps the commodity currencies, because of a general risk-off story that's resulted. But as I say, that's also a factor in, it's dependent on the Trump administration. So in general, it's a question of how the Trump administration moves forward from here. I think we have to assume the best, or at least not the worst, and that we don't get a major conflict, and I think that seems likely. We won't. But in the absence of any strong initiatives on fiscal policy from Trump, the dollar's still probably going to struggle to make any ground against the euro or sterling, which have both been resurgent partly for Brexit reasons, partly for positioning reasons, and partly for reasons relating to stronger European data. So I think that's more what we're waiting for than any North Korean development, some news on Trump tax reform. And the sounds out of Washington suggest that we're not going to get anything too conclusive in the near future. So I suspect that means the dollar may stay on the back foot, at least against European currencies for now.
Thank you, Adrian, for your expert views. This was the Weekly Wrap with myself, Jack Everett, and I'll be back on Monday for the week ahead. Until then, goodbye.